All right, let's talk about one of the most powerful and honestly most misunderstood tools in the market, gamma exposure. Today, we're going to demystify the whole thing. We're going to break down exactly how to find it, how to read it, and how to actually apply it step by step.
But first, I want you to imagine something. What if you had a topographical map of the market? A map that didn't try to predict the future, but instead just showed you the hidden terrain, where the mountains are, where the valleys are, the steep cliffs that are going to affect your journey. Well, that's exactly what gamma exposure, or GEX, is. It's your guide to the market's hidden structure.
Okay, before we dive deep, we have to do the quick but really important disclaimer. Everything we talk about today is for informational and educational purposes only. It is absolutely not financial advice. All trading involves risk, so you have to do your own research and make your own decisions. All right, let's get to it. So, here's our game plan. First, we're going to uncover this hidden map, what it is, and where you can find it for yourself. Then, we'll get into the fun part, learning how to actually read the terrain. After that, we're going to boil it all down to just 3 simple numbers you need every day. And finally, and this is crucial, we'll talk about the number 1 biggest mistake beginners make so you can just sidestep that trap completely. Okay, first things first, let's go find our map because this powerful data, it's way more accessible than you probably think.
Now, let's be super clear here. GEX is not a crystal ball. It's a snapshot that comes from the options market. See, big institutions, the market makers, they sell tons of options. And to stay neutral, they have to constantly hedge their positions. GEX simply tracks all that hedging activity. So it shows you the terrain they're all forced to navigate. It's not telling you where the price will go, but it reveals how their hedging is going to squeeze and push price around based on the current landscape.
And here's the best part. You can start looking at this stuff right away, for free. 2 fantastic places to start are Spot Gamma. They have a free dashboard with a really great visual chart. And Squeeze Metrics. They actually post their GX charts and key numbers every single day on social media and their site. Both of them give you everything you need to get going. So, you found the map. Now, how in the world do you actually read this thing? Let's break down the chart itself piece by piece. This right here, this is a gamma profile chart. This is the visual representation of our topographical map, and it looks complicated, but it's really just a simple histogram. Each of these bars represents a specific price level, and the height of the bar tells you how much influence, how much pull that level has. It's that simple. Taller bars mean a stronger influence. Let's break down the anatomy. The horizontal axis at the bottom, the x-axis, that shows you the stock prices. That's the location on our map. The vertical y-axis, that's the amount of gamma exposure. Think of that as the altitude. Now, see the bars above the 0 line? Those are our valleys. They represent a stabilizing force that tends to contain price. And the bars below 0? Those are the cliffs. They represent an amplifying force that can accelerate moves, especially to the downside. Now this is where it all comes together. This is where you can see the 2 opposing forces at play. On the left, you have positive gamma. Think of this as an anchor. In this environment, market makers are forced to hedge by buying when the market dips and selling when it rips. This acts like a brake on the market. It dampens volatility and keeps things kind of sticky. But on the right, you've got negative gamma. This is the complete opposite. It's like rocket fuel. Here, dealers are forced to sell into declines and buy into rallies, which pours gasoline on the fire. It accelerates moves and cranks up the volatility. Okay, let's get to the most practical part. How do we turn all this chart reading into something you can actually use? Well, we're going to create a simple 3-number checklist you can use every single morning before the market even opens. And I'm not kidding, it really is this simple. To get your bearings for the entire trading day, you just need to pull 3 key numbers from that gamma profile we just looked at. That's it. Number 1, and this is arguably the most important, is the 0 gamma level. This is your line in the sand. It is the literal price level where the market's personality flips from that stable, calm, positive gamma environment to that volatile, accelerating, negative gamma environment. It's a huge deal. Number 2 is the high gamma strike. All you do is look for the tallest positive gamma bar on the chart. That's your spot. Think of this level like a gravitational center for the day. In a stable market, price will just constantly get pulled back towards this level. It acts like a powerful magnet. And number 3 is the net position. This is just the sum of all the positive and negative bars put together. Think of it as your overall weather forecast. Is the number positive? Then we're expecting calm, stable conditions. Is it negative? Well, you better be prepared for a stormy, volatile day. It sets the whole context. So here's how you put it all together. This entire routine takes less than 60 seconds. Every morning before the market opens, you pull up spot gamma or squeeze metrics. You find those three numbers, 0 gamma, high gamma strike, and the net position. Write them down, and then just plot those levels directly on your chart. Boom, you now have your map for the day.
Now, knowing the data is only half the battle, right? You have to actually use it correctly. So let's talk about the single biggest mistake people make when they start using JEX so you can avoid it from day one. So what is it? What is that number one mistake? What's the trap that so many traders fall into when they first start navigating with this gamma map? This slide illustrates the most critical mindset shift you need to make. The wrong way is to treat these gamma levels like they're brick wall support and resistance. They're not. The right way is to see them as zones of influence that literally change how price behaves. That 0 gamma level, it isn't a wall that's going to stop price dead in its tracks. It's more like a doorway that price passes through into a whole new room where the rules of physics are different.
And here are a few other quick traps to watch out for. First, don't confuse gamma with open interest. They're different things. Open interest just tells you how many contracts exist. Gamma tells you about the hedging pressure from them. Also, remember that option expiration dates are a huge deal. Gamma's influence gets way stronger as you get closer to expiration. And finally, just know that this data can shift a bit during the day, so what you see at the open is your guide, not something set in stone.
Ultimately, it all comes down to this one simple idea. GEX is context. It is not a standalone trading signal. It doesn't replace your strategy. It makes your strategy better. The real edge you get from this comes from understanding the why behind the market's moves, not from just blindly buying or selling at a specific level.
So there you have it. You now have the tools to read the market's hidden terrain. You can actually see the invisible forces that are pushing and pulling on price below the surface. So the only question left is, now that you can read the map, where are you going to let it guide you?